Okay, perfect. So welcome everybody to today's very special session. Today we are doing a training on the right way to trade gold and silver, of course, presented by the Gold and Silver Club. So during today's session, we will be going through key news events that will influence gold and silver, the latest developments in the commodity markets, and forecasts for 2017, and the right way to trade gold and silver. So during the course of the session, we'll be having a look at the following. Janet Yellen is due to be delivering a speech in 1 hour's time, which is likely to cause a considerable amount of volatility. We could see some big moves, certainly on the US dollar, on gold, on silver, on oil. We'll be watching out for that very closely. Now, gold recently, we saw it reach a 1-month low off the back of the Federal Reserve increasing interest rates in mid-June. With that, we saw prices break down. We in fact saw prices go as low as $1,236 US per ounce earlier on this week before getting a bit of a supportive bounce. Gold was left exposed following on from a record 3-week surge in demand where we saw gold come very close to retesting $1,300 US per ounce. We'll have a look at gold very shortly. Crude oil so far down 20% so far in 2017 off the February highs as fundamental data continues to be negative. Libya aims to boost its production to 1 million barrels per day by the end of July, whilst Nigeria has also seen a strong recovery in production as well. So that has definitely had an impact on the oil market. We've continued to see more weakness in the oil market, although today has been interesting because today we have actually seen a surge to the upside over the US session, which we'll have a look at very shortly, which primes the oil market at a level where we could get supported. And I'll talk you through that when we go over to the live charts. Really today, I want to give you a bit of an insight into how you can trade gold and silver in order to take advantage of the moves day to day, how to trade them the right way, what you need to be aware of, what major news items really drive those markets, and how you can also capitalize on seasonality within those markets and also the cycles that we regularly see with gold and silver. So let's just go through our portfolio performance using the Gold and Silver Club research-driven strategies to give you a bit of an idea of how we've really benefited from some of the moves over the last week or so. Certainly, crude oil has been a very profitable market here, following on from the end of May OPEC statement, which has been very lucrative to the sell short side, which has been very lucrative for the sell short side for oil, taking advantage of breakdowns in price. So what we've seen overall has been a drop of almost 10% now in oil prices since the end of May here. We've seen the oil price break down over $10 US or 1,000 points to the downside, and we've continued to capitalize on a breakdown in price of oil. So more recently, we've got into another sell short on crude oil for the price to close lower. We've also had trading opportunities since last week, especially in Thursday and Friday last week, where we had a breakout to the upside for gold after we saw it recover after the FOMC statement. We've had a bounce to the upside. We've taken advantage of those short-term moves on both gold and silver for a breakout higher, and now again there are a key level of support as we transition into Janet Yellen's speech, which is approximately in 1 hour's time. So there's definitely been some shorter term trading opportunities as well as more swing trade opportunities as well, particularly on oil, has provided a lot of selling opportunities. So what I want to break down for you is the key difference between retail and professional traders. And it's important to be aware of this, that the majority of traders out there will use mainly a technical approach to their trading with a small amount of fundamentals to marry that up. So what that means is they're taking a lot of their cues for the markets off technical levels. So they're essentially utilizing various key indicators, and they're utilizing perhaps candlesticks, they're utilizing the charts to make a lot of their trading decisions, which is fine, it's good, it's certainly a good place to start, and utilizing fundamentals, news items and so forth to confirm your trade. But it's not giving you the whole picture. That's what most traders do out there. But really, if you want to go deeper and get a higher win rate on your trades or be more successful with your trading, you want to be following a professional trading process, which involves, of course, research. You need to be aware of the major trends, seasonality, correlations, cycles in the market. You marry that up with them fundamentals, the overall sentiment of the market as well, and then you want to marry that up with the technicals. That will then be the trigger point for you to either buy or sell, and at that point you will then know whether you want to be going into that market for a buy or a sell, what time frame, how long you want to be in and out of that trade. The research is very important. Having a view of the market before you've even got into a particular trade is also very important, and having an understanding of the major trends, the seasonality, the correlations, the cycles is, in my opinion, critical to be successful in the longer term when you trade, to have consistency with your trading. A good example of this is going back to what we've seen over the last 5 years, certainly in the last 15 years and 30 years on gold. If you pay attention to what gold tends to do at different times of the year, if you follow its seasonality cycles, it very clearly trends in particular ways at certain times of year. One of the most notable trends that we have on gold is at the beginning of the year, over the months of January and February. January over multiple time frames over the last 5 years, 15 years, and also 30 years has been one of the most profitable times to be trading gold to the long side, to the buy side. Now, if you have a look at the chart I have in front of me at the moment, you will see here where each year we have seen this very constant breakout to the upside, where at the beginning of January, essentially, gold starts off at a lower price, and by the end of January, as we go into February, we see quite significant upside on this market. We've definitely taken advantage of that by marrying that up also with what we're seeing the funds do. So essentially where the big money is going, what we're seeing overall hedge funds are doing, and this has been confirmed certainly over the last couple of years. We've seen a big inflow from hedge funds into the net long position, which essentially means they're buying at the end of December as we go into the beginning of January, and we see these long-term buy positions get confirmed, overall market sentiment changes, and once we see that big positions have been going into the market, we marry that up with what we're seeing in the market, particularly if it's an oversold condition and we've got a good entry, and we've seen that really consistent follow through over the last few years over the month of January. So it's just an example of research-driven trading where you've got a few points of confidence on your side. You then add that up with the technicals. You can then see where you're looking for your entry, looking for your exit time, and you're looking for multiple entries. If you're trading on, for example, binary.com, as the price is breaking out, you want to scale in and have multiple entries where some of those trades will be exited within a few hours, other trades within 24 hours, other trades will be swing trades where you will be in those trades for a slightly longer period of time. So here is going back to the beginning of January 2016, where we have executed a trade for the price to be higher. Essentially, we can continue to see good follow through on that. We continue to see this rally on gold right the way through to mid-February. It was also the same situation at the beginning of 2017 as well. We've seen a breakout after consolidation, typical January effect, where we're getting ready for a buying opportunity. We've then seen consistent follow through within the next 3-4 weeks. Gold has continued to break out. In fact, it was over a 700-point surge within the first 3 weeks of 2017. And just knowing these sort of impacts, knowing the cycles of the market, knowing seasonality can help you just get a much better edge on your trades. Now, what you want to do is also marry that up with the intermarket correlations. So I would always suggest whenever you are trading gold and silver, the key to really trade these markets is to monitor gold priced in other currencies, which is very important. Monitor the inverse correlation with stock markets, especially the S&P 500, for example, which tends to move in the opposite direction to gold and silver. Monitor the volatility index, which also moves in the opposite direction to indices such as the S&P 500. And the volatility index, it tends to move in sync with gold and silver. Volatility, which is also known as the VIX, tends to move in lockstep with gold and silver prices. So when the volatility is high, when we are seeing essentially the VIX going up, that is when you would expect gold and silver also to be going up as well. So it's essentially treated as a safe haven. When the markets are volatile, when there's lots going up, when volatility is increasing, gold and silver often get bid up, and that is where you start to see the stock market sell off. The S&P 500 will typically start to decline when we're seeing volatility in the market in increase. And you can watch that, you can look at the volatility index, you can track that, and here you can see the correlation. When the VIX is going up, this is where gold and silver will often rally as well, and they will also be going up too. So you want to be aware of that correlation, and you want to take advantage of that correlation too. So moving over to the VIX and the main key levels that you want to keep an eye on. Gold has performed over 10% in terms of the return from performance of gold every time we've got above the 30 level for the VIX. So if you do track the VIX, you follow the VIX, every time it has broken out to those extreme levels is where we've seen gold produce over 10% returns. It's been a very good indicator to know when is the right time to really get on the back of gold and silver trades for buy positions. Now, we have Janet Yellen, who's coming up to speak in approximately 50 minutes. Janet Yellen has one of the biggest impacts. She's chair of the Federal Reserve. She has one of the biggest impacts of any of the news items on gold, silver, and the US dollar. So the FOMC statements in particular provide a lot of volatility. So as head of the Federal Reserve, Janet Yellen, she has more influence over the US dollar's value than any other person. Her speeches are followed very closely by traders. They present regular news trading opportunities, and we've got one coming up in 50 minutes time. So we are likely to see volatility, and this could provide within the next 50 minutes a good opportunity to buy gold and silver, or potentially sell gold and silver depending on what she says. So we'll be looking at the potential for some volatility off the back of that, which would be in the next 50 minutes or so. Janet Yellen is due to be delivering a speech in the next 45 minutes, and this does provide a great trading opportunity. So I'll just move over and show you the main FOMC statements which we have over the course of the year are also followed up by speeches by Janet Yellen, which can create volatility and also additional trading opportunities. There are 8 trading opportunities from the FOMC every single year. 4 of those tend to have the biggest impact. We've just recently had the June FOMC statement, which was in mid-June on the 14th of June, where the Federal Reserve increased interest rates. Off the back of that, we saw gold and silver break down significantly. The US dollar index broke out to the upside, so we saw a significant decline in price for gold, especially after it had broken out to 1,300 US dollars per ounce. To put that into context, gold had broken down approximately 600 points after the FOMC statement, after the Federal Reserve. And the reason being is that the interest rates were increased, but not only that, Janet Yellen suggested a hawkish statement in that the Fed were in a position to increase interest rates more aggressively this year and going into 2018. Now, there's a lot of speculation whether Janet Yellen still holds that stance, how aggressive the Fed are looking to be. If they are looking to be more aggressive with regard to increasing interest rates, that will likely cause, again, a potential sell-off in gold and silver and a rally on the US dollar, and vice versa. If the speech tends to dodge that, or it's not as aggressive on the interest rates, or it's more of a dovish speech, we would then expect some support for gold and silver and potentially the US dollar. Also, what I would be looking at would be the S&P 500, the Dow Jones, the impact to those particular indices, and of course, US dollar, gold, and silver. Just to give you an idea, if you've not seen how much those statements can impact the markets, I will show you now. So we'll just move over and I'll show you some examples of some of the previous FOMC statements here as well. Okay, so off the back of the FOMC launching Operation Twist, we saw a 700-point drop in 24 hours. So a very considerable drop for the price of silver. We also saw off the back of the FOMC announcing QE3, so quantitative easing 3, gold soaring 400 points within 24 hours. When the FOMC ended quantitative easing, we saw a 600-point sell-off in 48 hours, so huge moves. We saw also, after the Federal Reserve hinted a December rate hike, a 500-point profit on gold within 10 days, so it's a very significant breakdown in the price of gold. In fact, we've more recently seen a 600-point breakdown in gold following on from the recent FOMC statement, so it has been very significant. So essentially, what does that mean? What does it mean for us on binary? What does it mean for us as traders? It means that we can take advantage of the volatility in the market. So we can take advantage of essentially these speeches by the Federal Reserve, we can take advantage of the volatility. The volatility is great for trading on binary because it allows us to take shorter term trades, getting in and out of the market. No need for a stop loss or take profit when you're trading on binary. You just need to get the overall direction right, the timing right, and also you need to get the execution right on the trade. Non-farm payrolls, the next non-farm payrolls is going to be next Friday, and it's another key fundamental driver for the precious metals. Report is released on the first Friday of every single month. The next non-farm payrolls is next Friday. Why is non-farm payroll data important? It shows us the number of jobs added or lost each month within the US economy, and that data is used by the Federal Reserve to assess and determine whether the economy is strong enough to withstand interest rates. So that is very important, whether the economy is in a strong enough position to withstand higher interest rates. And with that, we often see big volatility on non-farm payrolls. We've seen that certainly 350-point breakouts on gold are not uncommon off the back of NFP, 325-point breakdown in price. Here we've seen 250-point breakdown in price. So it's very common to see these big breakouts on the back of non-farm payrolls, 300-point surge within 1 hour. So essentially it does provide a good trading opportunity. We get a lot of volatility off the back of non-farm payrolls, FOMC statements, Janet Yellen delivering speeches. It does provide some really great trading opportunities. So again, within the next 40 minutes, Fed Chair Janet Yellen is scheduled to deliver a speech, which will be at 6 o'clock London time. We have also got coming up tomorrow, we've got several news items actually which will be important. One of those being crude oil inventories. Crude oil inventories have had a very big impact on oil throughout the last month. In fact, each crude oil inventories, which comes out at 3:30 p.m. London time every single Wednesday, has been a catalyst for a significant move to the downside for oil prices. So it's provided us with really good trading opportunities to take advantage of a continuation to the downside, because we've continued to see an oversupply in the market on each of those oil inventories figures, which has been coming out each Wednesday. It's at 3:30 London time tomorrow. If you trade oil, that must be on your radar tomorrow. That is going to be a major news item. Now, of course, the closely watched news item in the next 40 minutes is the Fed Chair Janet Yellen speaking. And then later on this week on Thursday, we have the GDP numbers at 1:30 London time on Thursday. We have the initial jobless claims as well, some more volatility off the back of that. And then later in the week as well, we've got also the Michigan consumer expectations. We have the Chicago PMI numbers. We also have the US Baker Hughes oil rig count, which will be coming out at 6 o'clock London time, which again can provide more volatility and more opportunity for trading oil as well. So shortly, we'll move over to the charts. I'll talk you through some of the trade setups that we are seeing in development at the moment. Essentially, when we're utilizing the binary.com platform, we look at two types of trades. Those are higher or lower. You win the payout if the market exit price is strictly higher than the entry price, if you are going for a higher trade. So for the price essentially to close higher than our entry, you win the entire trade if that is the case. So what you would need to get right for a higher trade is, of course, entry, and then you want to get the timing, so how long you want to be in the trade for, and then the exit of the trade as well, and of course the overall direction. It's very straightforward and transparent. You know what you're risking up front, you know how much you're going to profit from the trade, you know what your risk is. So for the stake, for example, for a £5,000 payout on gold, for the price to be higher, would be £2,843.26 for the deposit for a £5,000 payout. For the price to be lower, it would be a stake of £2,853.01 for a payout of £5,000 for the price to be lower, if we're looking for the price to break down over a given time frame. So everything is very transparent all up front. You know exactly what you're risking, you know exactly what your payout is on each trade. So with that, I will take you over to the charts. We'll have a look at what is starting to line up now on the markets. We talk you through some of the setups that we are monitoring now as we come towards the end of the UK session today, and as we transition in towards the end of the US session later on today as well. So I'm just going to bring over my screen. Okay, so a quick check-in again that you can all hear me okay, and you can also see the presentation okay as well. Yeah, fantastic. Thank you, Sharice. Okay, so first of all, we are looking at oil here. So we've got oil on the daily chart, and oil, you can see, had quite a significant pop to the upside today. And in fact, this has started to register a buy signal for us at the Gold and Silver Club. The price action that we've seen so far is indicating that oil here could be on the cusp of a buying opportunity with a bounce off $42 per barrel. What I would need to see today is a positive close. I would need to see certainly it close above yesterday's high. We've got a higher high, a higher low, potentially a higher close, and the potential also for oil to follow through here and come all the way back up towards the next key overhead levels of resistance, which sit at the moment between 45 to 46 US dollars per barrel. We are starting to get the signal here that oil is reaching a short-term low. Certainly it's coming out of an oversold condition. 42 US dollars per barrel was the minimum target that we perceived for bears in this market, because it could have been driven down lower. We could have seen it come down to 40 US dollars per barrel, 38 US dollars per barrel, but at the moment it is getting supported at 42. We can see this on the chart here. This has been a key swing low level going back to September of 2016 on the chart. We've also seen that be a supportive level going all the way back to also November of 2016, and more recently we've retested that level as well over the last week, but we are getting bid at this zone. If we have a look at this on the weekly chart, you'll see this a bit more clearly, where we've certainly got a level of support which is holding. Traders are looking to buy at this zone. We're seeing a bit more follow through at the moment, although I want to see how this market closes today. We've also got the API numbers, which will be coming through tonight at approximately 9:30 London time. We want to see whether we get some sort of impact off that. If the price structure changes into the close, and instead of this being a green candle, it essentially forms a rejection candle, so a red candle into the close, we would not look for a buy. We would in fact look to go for a sell and a continuation of this downward trend, because as of yet we haven't really fully broken and closed above this downward trending channel on oil. I would suggest it's on the verge of doing so, but it's not quite there yet. So if we were to see oil manage to break out, essentially close near the daily highs today, which would be approximately for US oil around $44, about 50 cents per barrel, we have the potential to see oil then continue to follow through and break out significantly higher. So for me, oil is one for the radar today. If it does pick up additional momentum, if it manages to close above all of this resistance and we get a positive close today, so essentially a close which would be above about $44.50 per barrel, I'm looking therefore for a buy opportunity on oil if we do see that happen. That could be a 24-hour trade, or you could even look to be, or we could even look to be in and out of that position before tomorrow's oil inventories, which is at 3:30 p.m. London time. This is US oil, so I will now bring you out as well, and we can have a look at Brent crude oil too. So Brent crude oil right now, we can see here where overall we're getting a buy signal is starting to develop on Brent crude oil. It's already managed to break above quite a lot of overhead resistance. We've had a downward trending channel which has been in place here since the OPEC meeting. You can see where we've just about breached the high of this level just actually over the US session today, and we're starting to break out. I would suggest again, if we're going to see follow through, we need to see oil close above, for Brent crude oil, approximately 47 US dollars per barrel. If it does that, it then could have the potential to follow through further, a continuation pattern to the upside as we go into tomorrow's session, and we could continue to see this market start to find some support around 45 US dollars per barrel, get bid up above 47, and then start to make a run up back towards the upper end of its major channels here. So I would certainly keep an eye on oil here. It is quite significantly overbought. It has got a lot of room if it does start to catch fire here and we start to see more momentum to the upside. I would certainly put oil on your radar, because we could see this market break out to the upside. Also, it's worth noting where we're sat in respect to commodity currencies at the moment. So with a rally on oil, what you would expect to see would be for the potential for US dollar, Canadian dollar, which is on my chart at the moment, to break down. So there is an inverse correlation between these two markets. So you essentially see, because Canada is a big exporter of oil, there's quite a lot of impact to the price of oil with US dollar, Canadian dollar. They basically move, for the most part, in opposite directions. So if oil goes up, you expect US dollar, Canadian dollar to go down. And that is what we've seen today. We've seen another breakdown in price. Potentially, we might continue to see this move to the downside on US dollar, Canadian dollar if oil does break out. And there could also be a short-term selling opportunity here for US dollar, Canadian dollar if we do see a full-on breakout for gold. A market which I would definitely also put on your radar right now is New Zealand dollar, US dollar, because it looks like we got a false breakout to the upside today, what is known as a bull trap. We're starting to see a turnaround in price here for the New Zealand dollar, US dollar. It's formed a rejection candle on the daily chart, and I would suggest we could start to see this roll over. It's certainly quite significantly overbought. We've been looking at this market for the last week or so for the potential for it to roll over and sell off. You can see here quite clearly it has formed a rejection candle on the daily chart. It has the potential then to roll over and break down. It's not bad from a follow-through point of view. You could look at that for several points of confirmation if it starts to roll over and break down. And I would certainly keep an eye out for the potential for the New Zealand dollar, US dollar to break down, and also Australian dollar, US dollar. It's quite interesting on this market because you've got such a clean level of overhead resistance here. These trend channels are working really well at the moment as a major overhead level of resistance here. I want to see what sort of impact we get from Janet Yellen on the US dollar, on several commodity currencies, but I would suggest we might be lining up for a sell short opportunity on this, although preference right now, if I had to choose between Australian dollar, US dollar and New Zealand dollar, US dollar, you can see here where this is flickering on and off, which is signaling we might start to see a sell opportunity. It's quite significantly overbought. I would certainly consider that a sell might be lining up here for New Zealand dollar, US dollar. So just to put that on your radar as well, that is a market I would definitely keep on the radar this afternoon as we go into the later part of the US session today. Now, of course, gold and silver will most likely get some volatility within the next half an hour or so off the back of Janet Yellen's speech. What do you need to be aware of on gold and silver at the moment? Right now, we need to move over to major zones here on the weekly. So first of all, gold on the weekly chart, it got a bid right at the lower end of the trend channel from last week. We found support at that key underlying level of support on the weekly. We got a bit of a bounce from that into the close last Friday. What was interesting yesterday is that we saw a very big amount of volumes in contracts go through the gold market for a sell. 18,500 contracts were essentially dumped on gold yesterday, running through the CME. And with that, we saw a bit of a flash crash in gold. It dropped almost 200 points within a few minutes. In fact, a lot of the move happened within about 15 seconds just yesterday. So that is why we've seen this very sudden drop in price here with gold yesterday after it was hovering quite well around 1,257 US dollars per ounce. We had this sudden flash crash in price, got bid back up into the close, and now it's respecting just about this underlying trend channel, but it's at a bit of a decision point as to whether gold wants to hold here and then break higher, slowly but surely start to break out to the upside, or whether we see a breakdown in price, and in fact, if we're going to revisit 1235 and potentially go lower. I would suggest we'll likely get a resolution on this as we go into the FOMC statement today as well. Sorry, the Janet Yellen speech, not the FOMC statement, but very similar in terms of the sort of impact that should have on the market. Also, if we go over to silver, if we have a look at silver on the monthly chart, again, I would suggest that silver is at a crossroads right at this point in time. We have a pennant formation, which is developed on the monthly chart. We've got higher lows here, also lower highs, all developing into the apex of this pennant formation where we've been ricocheting here between support and resistance. Price structure is getting tighter and tighter, and I'm certainly looking for a resolution soon, and it could be an area that we do see major support. If we go over to the monthly chart here, you will see where silver is starting to bounce right from the lower end of this zone. So we are seeing a bit of a bounce starting to develop in silver here from the lower end of a major underlying support channel, which if that was to break, we could see considerable downside. But if it holds at this level, we could also see silver bounce, and it could be a great buying opportunity. If we go over to silver on the daily chart, very much like gold, silver dropped down yesterday very fast too. So it breached the lows of the last week. But what was interesting on silver yesterday, if we go over to the 1 hour chart, is that we saw very quickly a breakout back to the upside. We saw this move very short-lived, and we saw a retracement almost back to where it was trading at prior to the significant fall. And at the moment, we're seeing it tread water a little bit around $16.58 per ounce here, but we do have this key swing low in price here on silver. And what I would look at, if we're looking for a buy here, I would look essentially for a break above the previous day's high here. So essentially looking for a bit more confirmation above Friday's high, which is about 1680, and also yesterday's high, if you wanted to be more aggressive on that, which is a break above 1675. So that is what could lead to a more significant follow through here on silver. I would be looking at a buy opportunity if we did see a break above those levels, a short-term buy and also potential swing trade as well. Take advantage of momentum for a break above the weekly highs here. So if we were to breach above the weekly highs, we've also got a similar formation here on silver to what we've got on gold, where we've come off some major underlying support. We've got another bounce here off the major underlying trend channel here on the weekly chart. You can see 1, 2, 3, 4, 5 bounces. Again, rejection right at a key Fibonacci retracement level, 76.4 Fibonacci retracement level. We've also formed another hammer so far. We are definitely getting bid up around this zone, so obviously some traders are looking to buy and try and take advantage of a bounce at this level, but we need a bit more confirmation, because it is possible as well that silver could roll over off the back of any support for the US dollar, and we could see it retest the lows here too. So I am watching out for that. Also, I would put the S&P 500 and other equities on your radar right now as well. The reason being is that the S&P 500 did produce a very strong rejection candle yesterday, and on the weekly chart as well, we also have a rejection candle from last week. It looks like the S&P could be on the verge of rolling over here. What I do want to see get broken from a technical point of view, and you can add this onto your charts if you've not got this already, is I do want to see a key level of support get breached in order to look for more downside here. The key level I want to see get breached at the moment is the 21-day moving average, and you can see how well the 21-day moving average is holding up at the moment for the S&P 500. Now, likely we'll get some volatility within the next half an hour or so. If it breaches below last week's lows, and if it also breaches below the daily lows here as well over the last 3 or 4 days where the price has been consolidating, I suspect this could provide a good sell short opportunity from an overbought condition where it's starting to roll over a little bit here, and I will be looking for a potential to sell. And if we did see the S&P 500, remember the inverse correlations, intermarket correlations, that would likely also see gold and silver move higher as well. So if equities, the S&P 500, the Dow Jones has already started to break down over the last few days, and NASDAQ too is looking the most bearish actually out of the equities right now, out of the indices that we track. We've also seen the DAX start to break down, so that's looking quite weak at the moment. Even the FTSE 100 has been treading water over the last week here. So overall, I am looking for a potential for a sell short opportunity on the indices, the major indices too. So just to put that on your radar alongside gold, silver, you just want to look at the major intermarket correlations, and I see the potential for a trade opportunity lining up within the next 24 hours on oil as well. So essentially oil, gold, silver, S&P 500, commodity currencies, US dollar, Canadian dollar, New Zealand dollar, US dollar, Australian dollar, US dollar. I see a lot of trading opportunities lining up today, and as we transition into tomorrow, definitely trades that you don't want to miss out on. And of course, if you do want to find out more, if you'd like to learn how to become a member of the Gold and Silver Club and gain access to all of the trades that we take during the week, all of our trade ideas, join our live trading room sessions during the week as well. Very simply, if you'd like to do so and really take your trading to the next level, all you need to do, and I'll just put the link here into the chat for everybody as well, is go over to www.jointhegoldandsilverclub.com. So www.jointhegoldandsilverclub.com. From there, what you get by being a member is you have access to our commodity research, our trade notifications, our live trading room webinars. You get access to all of those during the week, so you can join us for those sessions. You get access to all of that by being a member of the Gold and Silver Club. So you get exclusive access to our proprietary trading research to help you make smarter, more well-informed trading decisions, especially when it comes, of course, to our unique insights and analysis, which ensure you're well equipped with the most accurate technical and fundamental information that you need to identify market trends early, predict future price movements, and act on every trading decision with confidence. We also provide you with exclusive weekly live trading room webinars, live trade ideas shared with you, real-time trade alerts via email and SMS so you don't miss out on profitable trades, exact details of where to enter, exit, place a stop loss on each of the trades that we're taking, exact access to the private members live trading room forum, ongoing support, mentoring to help you achieve long-term success, and exclusive access to our proprietary trading research to give you the ultimate edge in the market. So again, for that, all you need to do is go across to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, so that's www.jointhegoldensilverclub.com, complete the application form, and we very much look forward to welcoming you to the Gold and Silver Club. So with that, I wish you all great trading. Have a fantastic day. And of course, we'll see you on the next session. And good luck today, guys, with Janet Yellen's speech as well. Any questions, any comments, feel free to email us as well at office@thegoldensilverclub.com. Okay, fantastic. Okay, take care, everyone. We'll speak to you very soon. Good trading. Thanks, guys. Bye-bye.